I hope you have been having a good time so far and getting all the answers that you came here looking for. We will now be moving on to the last session of the day, which is also one of the most exciting ones. It's about scaling up or exit strategy, understanding the VC and investor game. I would like to invite my panelists for this session on the stage. May I please have Mr. Vikram Bhatt, founder, Enrich, Mr. Blessing Manikandan, CEO, Paulsons Beauty and Fashion Private Limited, Mr. Pralay Bakshi, COO, Bina Punjani Hair Studio, Goa, and Mr. Vikram Mohan, CEO, Bounce Salon. Thank you, Vikram.
Check.
All right. So we have four gentlemen here who are successfully heading their enterprises, and they owe their success to some extent to some wise financial decisions that they have made, which they are going to share with us today. So we will be starting with asking them on the entire investment and scaling up strategy that they have implemented. I request you all to please keep your questions for the end of the session, and I request the speakers to speak as much in Hindi as possible because our audience would really appreciate that. Okay. All right. I would like to ask this question to the entire panel. So maybe we can start with Blessing, sir. When is the right time for a salon business to look for investors?
Praise the Lord. I always know, like come from a consulting background, so I always look into the four things. One is your capex and your revenue. What is your revenue and what is your opex and what is your bottom line, your profit or loss. Once you have a proven business model, once you make money, and once you are happy with your happy with what you do,
Yeah.
then actually you can think about expansion. When you think about expansion, either you can go with a coco model. So if you have to go with a company owned, company operated model, you need a fund. If you have your own fund, first actually like bootstrapping is a good one, so that you put your own money, you can understand the pain points, so that actually you will play safe with other people money. So that is my advice. Once your business model makes financial sense, then actually you can look for funding.
All right. Vikram?
Hi. Hey, everyone. Just wanted to ask you guys a quick question. Just a show of hands. How many of you guys own your own business here? How many of you guys own your own salons? See, Manisha putting up a hand. How many of you guys own your own salons? How many of you guys own more than one salon? Okay. So I guess then this question makes sense. So for me, when we decided to open our second door, I think it purely happened because of the success that we saw when we opened our first salon. So at the rate in which the first store grew, we said, you know what? We found a great space. So always you find the great space and then you're like, you know what? Maybe we should expand. We didn't really have the money. We didn't really understand what was going on, but we knew our first salon was making at least break-even money from day one. And then we had the passion. So we jumped into the deep end of the pool. So we found a great space. We opened our first salon in Chennai in 2004. And then in 2005, someone said there's this great space in Bangalore. So we went and saw it, and it was like 4,000 something square feet. And we were like, can we do this? And we did it. We just opened. Nobody came for a long time. Nobody understood who we were, but slowly but surely we built it. And today we have multiple stores in 3 cities. So I would say only you would know when the time is right. Easier way is how ambitious are you? Is one salon enough? Because scaling up is one thing, but scaling up also comes with its own issues. Yeah, because one salon itself, you break your head over the daily issues, and I'm sure my fellow panelists will agree. So going 2, 3, 4 after that, you need to understand that the roots of the first, who you are as a brand, you need to really understand that. What do you bring to the table? For someone like Blessing, they have Tony and Guy, which is a world famous brand. But when they came to India, they were unknown. They made Tony and Guy popular in at least the south of India. Because it was an unknown brand in India, only amongst hairstylists. So I think you need to know. And then we'll talk, I think, later about how you can raise funds, whether you go the loan way, the bank way, the rich uncle way, or the VC way. Yeah, so I think you should know when the time is right. Do you have the passion? Do you have the capacity? Do you have the vision to grow?
Right. So it's the gut feeling.
Over to my brother Vikram.
Thank you, Vikram. Okay, I think most of you here, or all the experiences we have for last 2-3 decades, I'm sure this business has evolved in last 2 decades. Without even realizing this, each of us, even if I'm a creative person, I'm a hairdresser or a beauty therapist or anyone, would have got the first salon also under some arrangement of need of funding. And you can relate this. Either, like for example, me and Rohit started this business not with the objective of setting up the business, just to help a friend. So quite a few of us, actually without realizing the need of fund, would have started as a friendly venture. Over a period of time, it becomes a partnership firm. You grow a little more, and then you find a venture capitalist or an angel investor who's interested and excited about your business. And that's how the journey will evolve. Yeah, from 1 salon to 5 salons to 10 to maybe even more. Each stage will require a different set of partnership. So all of you are doing it. Second important thing, be it alone, be it especially partnership or franchise or private equity or venture capitalist, meeting of mind is very important. As long as your wavelength, your calibration of your thoughts are matching to each other, whomever you are partnering with, I think it will work. Otherwise, you think about a scale, you hurry up, you become partners, but then you get into a situation where it becomes difficult to manage, and that actually completely deviates you from your scale or what energy you want to, or what skill you want to achieve. I think being an investor, being a partner, easy. Meeting of mind is very important for any of you thinking about expanding your business.
Very interesting. The meeting of minds is very interesting because Bina and I, we are married, and often our minds don't meet. So Bina wanted to grow at a different rate. I wanted to grow at a different rate. Bina was very happy doing just 1 salon, and I sort of nudged her into 4 salons in Goa. So we started 11 years ago with a single salon. Bina, of course, is known for her expertise. So we wanted to have an expertise-based range of salons. We quickly discovered that only hair in Goa doesn't get you enough revenue. So we started beauty as well. So we have 4 salons. We have an academy. We set up an academy very early because we said, this is an industry with very big sharks. Okay. So if we have to survive in this industry, the Delhi sharks are bigger, right? So if we have to survive, we have to bring something to the table that other people can't. And that for us was the expertise, because there are many players who have deeper pockets. So we decided to focus on expertise. And our challenge, we've had a lot of people come to us and say, "Hamara ek Bangalore mein franchise khol do, Hyderabad mein khol do, Chennai mein khol do." And we've always resisted, because even when we opened our South Goa franchise, South Goa salon, company-owned salon, we found it difficult to control the quality. So that's something that's always been a challenge for us, because we standardize. All our hairdressers work in the same system. So we're very particular about that, because of which it sort of limits scale. That's the challenge that we think we've solved using a bunch of tools that we've been exposed to during this. So we are hoping to step out of Goa within the next 1 year, but where, what, how? So I'm here to get answers to some of my questions. Where, how, what? So these three people are my advisors for now.
So in the morning session, Vikas asked Mr. Kumarvel which was the most difficult part of his journey of getting on with opening of so many salons, and he said it is going from the 6th and 7th to the probably the 25th, basically getting out of your comfort zone. So there comes a point where you are in your comfort zone and then you want to expand, and getting out of it is where you need not just the push but also the financial support. So my question to the panel is, how do we get this financial support? Maybe for members of the audience it would be going from the first to the second salon, but where should this financial support come from? Do we need to look at outside capital, or can we make do with what we have?
To take audible? Hello? Yeah. Can you?
Yeah.
So if you take a naturals case, because I traveled with them as a consultant for a long time, from 75 to 400 outlets, I traveled with them. So when Mr. Kumarvel and Bina, they started their venture, the initial, the term they created is franchising. Actually, they call it as a franchising. Initial stages, they made their staff as well as their own family members as their partners, and they gave the assurance and the confidence to invest in their venture. Then the franchising started, and those days, even the bankers are not ready to invest in salon business. So they were able to, demonstrate and convince their staff to take the franchise, to invest in the business, and then everyone followed.
Okay, so that was their idea, but what if a salon has to expand on its own when they want to replicate their name?
Ideally, bootstrapping, and as well as bankers are nowadays bankers. Why bank exists? Because they have to lend money. Actually, they are ready, but no, if our books are clean. Most of the thing what I see in this industry is the book is not clean. No, you are not having your GST. You are not having your a GST file properly, or there is a bank transaction. People want to see what is happening in the bank transactions. So if it is everything is right, even my first franchise partner, now he owns first franchise partner means a single partner owns 5 outlets. If one franchisee can able to get convince the bankers, a brand owner can able to convince them to invest more.
राइट सो ब्लेसिंग सर ये कह रहे हैं कि अगर हमें एक्सपैंड करना है और किसी भी मॉडल से फ्रेंचाइजी या कंपनी ओन, अपने अकाउंट बुक्स क्लियर रखना ज़रूरी है, क्योंकि बैंक्स हेल्प करती हैं अगर आपके अकाउंट्स ठीक हो तो. विक्रम, व्हाट वुड यू लाइक टू ऐड टू दिस?
So we actually opened our second salon very quickly, and we opened our third salon after 7 or 8 years. So that's how much focus we put into our first 2 babies. And after that, we started scaling up much faster, almost like at a rate of 1 or 2 salons every year. Initially, we would take bank loans. Internal accruals went straight back into training. Just as my fellow panelists, just as Pralay said, training was very important to us. So we opened our second salon and immediately opened the academy. And opening the academy was way harder than the salon. I still say our academies are our most, it's a beacon of pride for us, because it's not easy to find good trainers, and it takes a lot of commitment, and there's no money in it. You're doing it out of pure passion. You're doing it for the industry. You're giving back to the industry as well. And you're kind of telling your customers that, you know what, not only can we do decent hair, but we also teach. So it gives them a little more confidence. So we work with private financing. initially at very high rates of interest. Took some crazy decisions. My mother started the business. So mother and son together would just see a property and just go berserk. And eventually, when we understood, because I'm a hairstylist myself, and I was behind the chair for almost 12 years, 8, 9, 10 appointments every day, cutting. But I also had business acumen, interest in expanding. I wanted to grow the brand because I saw that there was potential, that our clients loved the brand. So this idea of going to a venture capitalist or a private equity fund was thrown to me by a friend. So then obviously we started preparing. We had a advisor on board who helped us go around and pitch our business to others where we sell a stake to them. So instead of going public, for which you need to be at least a couple of 100 crores of turnover, we're a much smaller business. A small business 7 years ago when we got funded. So we got a valuation. Luckily, a bunch of people believed in us and they gave us money. But once the money came in, it's not free money. It's at a very high rate of interest. And eventually you have to give these guys exit. And I've heard of stories, a lot of people told me, don't go that route. You guys are too passionate. These guys are sharks. They're going to come and eat you up. And I was like, you know what? I need to grow. And I can't keep borrowing money like this. And with the foundation that we've set up with the academy and these 3-4 stores, which are all doing very well. We had good team members, good teammates, like family. So we went that route. We took the money and then we had to start running because the money is chasing you. The interest is going up. And luckily, today, opening salons have become kind of like a cookie cutter model. We're opening a salon on Friday. I visited it twice. But of course, design, training, all of that is where I now contribute to. But we have people to handle this thing. In fact, I was sitting in the back seat and approving a particular paint shade. That's how quickly we're expanding now. And now we're expanding through our own internal accruals. We're not borrowing any more money. We don't have any more debt. And whatever money we make, we take a little bit of it for whatever we need. And the rest goes back straight into expansion. So this is how we have been operating. And hopefully we'll get an exit soon, or at least give our investors an exit soon. You'll hear.
Yes.
So all of us, when we started off, this financing through equity or venture capitalists was too early in that stage, right? So we would have started on our own, or we would have got some partner. This is the ground realities 20 years ago. So you start own, become partner, then you think about getting to franchise or get to venture capitalist. You achieve a scale of 20, and then that's how private equity guy will come. So each stage has its own scale and size where an individual or an institute is interested in getting into your business. But having said that, be it one partnership, any other, beyond a point of time, capital is a commodity. And I repeat, capital is a commodity. It will be available. There are tons of money chasing great people and great businesses. What you need to take decision, and it may sound a little gyan, but I would say capability and the capacity. If you have a capability, there are enough people to fund you. If you have capacity, don't get it utilized or rather unused if you want to move fast. Everything else can be managed. And equity is dear. In overall, if you start something smaller, how much ever equity or partnership you are giving it to your partners, do value it, because in future it will tell you how costly it was or it is. Sachin sir, you see, capability is like, am I passionate enough, or is my systems and processes are in place? Is my training, education, which is what? Soul, and then which, one is passion. But beyond that, beyond that, do I have strong education support? Do I have people who can manage the business? Because some of us also find challenging in delegation. Very easily we get into each and everything, right? So the power comes where, you're empowering your people down the line. They'll be able to take it up. So these are all capability issues, like, how you meet your mind, how you ensure the systems and processes are in place. If you have that mindset, certainly you will move. I think Vikram has done it successfully. He was technical guy, right? But he's moved to the business. And we have quite a few such examples who can move and then who can scale up.
What I've also noticed is just one point is the problems in one salon when you become, let's say, even 20 is the same. It's how you handle it, the people you've trained to handle it. And I always say the problem should eventually come to me if all of you guys have failed. So the issues will be the same. But the thing is, can you really handle that kind of pressure? Do you have that kind of vision? Can you do it? Because sometimes it's heartbreaking. You're sitting in like, you solve one issue, the next issue comes. But you got to roll up your sleeve and get dirty. So I always call myself not the CEO, but the Chief Janitor Officer. Mostly I'm cleaning up messes.
And we all know our business is running on treadmill. So each of us are going to do 70-80% of our work the way what we did yesterday or last week or last month, right? But that is what it is. What it requires is a consistency. What it requires is the level of experience or expectation we are creating on our people or our customers. As long as we are ready to meet that expectation, then no one can stop us from expanding.
Yes, Pralay.
Great, lovely insights. Chief Janitor I relate to that a lot. But so your question was, where does the money come from? And I think the most important question to answer is, any business is a risk. Who's going to take the risk? So for example, I have my own money. I have savings. Should I put that into my next salon? Should I borrow from the bank? These two require me to take the risk. What if the venture doesn't work? It's my money down the drain. So of course, I want to use somebody else's money, but then you're giving either interest or you're giving a stake. So I think it fundamentally boils down to who is going to take the risk. So some people choose to take the risk, like Vikram 1 and Vikram 2. Let me address that. But Vikram and his mother, Lata, took the risk. They said, we'll borrow from the bank, we'll pay the interest, we'll take the risk of this venture. If it works, great. If it doesn't, it's on us. On the other hand, you could go to the bank. And then if it doesn't work, you're not only liable for the capital, you're also liable for the collateral, interest. There's a whole bunch of things. So the salon industry is very, very capital intensive. Every branch costs you tens of lakhs, a crore if you want to do a really fancy thing. So it's a lot of money. And we have 11 years, we are like putting all the money back into the business. And it's like at some point, we've got to take some money out for ourselves. So at that stage, you start thinking maybe you should use somebody else's money. So franchising is one option where the investment is by somebody else, but then you're only making 10% of the revenue or 12% of the revenue. You're not getting the upside. Similarly with equity, if you're giving away 30% equity, you're only making 70% of the upside. So there are pluses and minuses. But the fundamental question is, are you going to take the risk or are you going to let somebody else take the risk? And that's where the money is going to come from.
मैं क्विकली ये सारे एक्सपर्ट्स के आंसर्स को समराइज करूँगी. इन्वेस्टमेंट अगर आपको एक्सपेंशन के लिए चाहिए तो 4-5 तरीके हैं जो आप यूज़ कर सकते हैं. और जैसे प्रलय ने कहा, रिस्क असेसमेंट के बाद ही पता चलेगा कि आप कौन सा ऑप्शन चूज़ करना चाहेंगे. या तो आप खुद के सेविंग्स इन्वेस्ट कर सकते हैं, बैंक से लोन ले सकते हैं, किसी बाहर के इन्वेस्टर्स से इन्वेस्ट करवा सकते हैं इन द फॉर्म ऑफ फ्रेंचाइजी या इक्विटी कोलैटरल रख कर. तो बेसिकली आपके रिस्क असेसमेंट पे डिपेंड करता है कि आप कितना रिस्क अपने ऊपर लेना चाहते हैं, कितना मार्केट से पैसा उठाना चाहते हैं और एक्सपैंड करना चाहते हैं. एंड इट ऑल बॉइल्स डाउन टू व्हाट विक्रम मोहन सेड, दैट इट्स ऑल अबाउट हैविंग अ सोल. जितना आपका कैपेसिटी है, जितना आपका पैशन है, उतना ही आप एक्सपेंशन कर पाएंगे.
Sorry, I just want to add one thing to this.
Yes.
That the using somebody else's money is very useful if you're trying to scale up and build your brand. So profitability of individual salons might not be as important as having 300 salons and therefore a brand that is recognized. There is value in building the brand as well. तो आप investment लेके, stake देके, interest देके, जो भी देके आपको scale करना है और brand बनाना है, तो आप ज़्यादा fast कर सकते हो, equity कर सकते हो. Okay. It's okay to lose money in that case.
So when we are taking money from an investor, what are the pros and cons? What are the red flags that we should be looking out for? Let's start from you and then move down the line.
I think what Vikram mentioned is meeting of minds. So I met Rod this morning. He was complaining about his partner that he had got into partnership with and eventually split with, right? So अगर आपका vision और partner का vision match नहीं करता, तो you're in trouble because partner will want you to go at a certain pace, you want to go at a certain pace, and there's always going to be conflict. तो सबसे important चीज है पैसे तो मिल जाएंगे, but जो पैसे दे रहा है उसका vision और आपका vision match करता है कि नहीं? You could be a hair expertise company that sort of gets into products, whether you wanted to get into products or whether your partner made you get into products, that's the question.
Yeah.
Right? What is your partner's sort of motivation and what is your motivation? Dono match nahi karenge, you're in trouble.
Just to add, Pralay, one is that whether you are partnering, you are taking a franchisee, or you are doing venture capital or private equity, ensure there is only one truth of the version. So, one truth of the story. So, you can't have, so that transparency you maintain, especially dealing with private equity guys who are going to put money because they are investing on people, they are not, and then they are investing on business. So, one of our learning has been, as long as your systems and processes are transparent, and there is only one truth of the version, or rather one version of the truth, I'm sorry. So, whether he's talking to me or Rohit or Sachin or my accountant or my person on the ground, everyone has to follow one, because let's understand, each of these investors are also custodian of someone else's money. They are not the owners of that money. And for them, the success of their fund or the success of their business is what is happening today. If they make losses, there is no tomorrow for them. So they'll be extra careful. So as far as your legal and compliance is concerned, it has to be clear. Your audit has to be on time. Any taxes you are paying, any people, your people whom you are paying, if there are any irregularities on it, these are the parameters investor would always judge you on. They'll decide what you are saying versus what your intention is and what is it back with the data and the documentation. As long as you are clear on that front, no challenge. Yes, but investor, second thing. Also, investors come with the time horizon, right? An angel investor will come with maybe 1 to 3 years of timeline. Venture capitalist whose ticket size could be maybe $1 million, maybe 5-10 crore to maybe even 20 crore. They will come with 5 to 7 years of horizon. And when private equity guy comes, which are larger, and it could be maybe 25 crore, 50 crore, they will come with a slightly longer time period, which is 8 to 10 years. But ensure, if an investor is a financial investor in nature, then you also carry a responsibility of giving him or her an exit over a period of time. You can get exit together, so you can do every possible thing, what you want to do. Example of Enrich. When we got our first round of investment in 2011, for almost a year, we could not leverage fund. There's some 30 crore lying in our company and we could not. So we decided we need to be full time on this. We need to get there. We need to grow the business. We could successfully give them exit in 2018. And it was a great, I would say, happy incident. Like, we gave exit to the investor, JM Financial, along with that MJ, our partner. He decided to take the exit. Even he could take the exit. Business could only grow from there, right? So these are the opportunities one has to look forward. And if you're working with the right intent, things will come up. There is no challenge at all.
All right.
I think my beardy friend Vikram has pretty much covered everything. But the question I think was pros and cons. Pros definitely is you get cash. You get money where you don't really have to pay back. The payback is after 5-6 years, depending on, like, COVID came, so my fund got extended by 2 more years. But now I'm under pressure to give them exit. Now the business is scaled up, we're doing very well, touch wood, all stores are profitable, we're posting great numbers. But the pros, you're going to get the money. The cons, eventually, you're going to have to give them an exit. Yeah, lots of people, they don't give exits, you can take them to court, it becomes messy, legal, all of that. But you don't want to get into that mess, right? Now, there are other pros as well, like he said. Like when we were 4, 5 salons or 6 salons old, when these guys came on board, today, on the 15th of every month, I know exactly how much money each store has made. We have our MIS reports all set, we pay our taxes, everything is so streamlined. It was complete chaos before these guys came on board. So they will come and guide you. They have no idea about how to run a salon. When it comes to running a salon, it's very clear, you don't interfere. But when it comes to how the business is run, the monetary aspects, where are we investing? What is the capex? What is the ROI? How much are we paying staff? Where to open next? All these, we are all sitting together, and it's a meeting of minds again. So unless you find that right person who you can get along with, and we got really lucky. We got a very, very good group of people who believed in us, and we've had really no conflict till now. And even during COVID and everything, they were really understanding. Although they didn't have any money to give me because they were broke by themselves. But we kind of pulled through it. So I think these are the basic pros and cons going in a private equity route. I think Blessing would be able to tell you on the franchising front.
Blessing, I'm sure he will present his view how to avoid private equity and then grow through franchise, which is equally great model.
Yeah.
So the the funding company, they have raised the fund, telling their investors that we will give you better returns, right? So they are always on the deadlines and with the targets, where to park the money and how to create some news and how to give the rosy pictures. Yeah, so they have to do all this exercise. So what happens then? Actually, the founders and the CXOs has to run on the treadmill, and they have to do all this exercise, and they have to create a lot of PR, and they have to show all these numbers. So, and also here you are diluting a stake. So the better way to raise fund is to franchise. Without diluting your stake, giving your share, you can able to raise fund by giving your franchise. You are raising a fund through your franchise fee, and they are going to invest, and they are going to share their profit with you. So that is the beauty of franchising. So that's how Tony and Guy has done across India. They still, the family owns the brand. They haven't diluted this share, but they have presence across the world. Now they have a lot of other divisions. Now the product is a big hit. So still they have the complete control. Franchising and licensing is a great route for, especially for the artistic community. Because most of the artists, we have a lot of case study where people joined with the wrong hands, and the brand has been taken over by the investors, and they ditch the brand also. So franchising is the best route, and if you are going for the organized funding, then you have to get into the you need to have a team, the professionals with you. Not you cannot run the show with your existing team, or you need to have a team, professionals, and you need to have a right bankers, investment bankers who can go and get you the right kind of investors who can marry you, the right investors at the right time when you need the money actually. So for what you need the money, after raising the money, you cannot think what we can do with this money. So franchising helps us because you don't dilute the stake, as well as you have complete control over your brand, because the entrepreneur who has invested is sitting and running the business here. It is not your manager sitting and running the business. So he is worried about the power EB, and your manpower cost, and he also worried about how to pay his rent. So franchising is the best route. I always evangelize franchising.
Yes, Vikram.
Just one question. Do you really have control on your franchisees, what they're doing?
When you have a powerful brand, you don't need to worry about it.
I guess so. Probably you guys are doing it very well. We couldn't. We tried franchising and we stopped because we really could not control the way these characters were running our business. So we tried it. We got our hands burned because for us, quality is everything. I'd rather have 5 salons offering the same service, the top-notch quality, rather than having 100 which are doing their own thing, because realistically, there's only that much. Eventually, he's going to tell you, it's my opinion, humble opinion, he's going to tell you, I've paid you franchise money, I've got your brand, now you stop entering. maybe you can do audits of finance and all of that, but really quality control and stuff is tough. Second point, what I want to ask you is, I think eventually everybody wants to retire. I mean, I may be a bit young to talk about retirement, but everybody at one point wants to maybe do something else in their life. Being a franchisee brand, how do you get out of the business?
What is the first question?
How are you going to retire, Blessing?
How do you do?
How are you going to retire?
Retire.
With
See,
200 franchises, what happens next? Like, where is the end?
yeah. See what happens. No, like I'll tell you the another beautiful story. So why we took. So you should understand why Tony and Guy came to Chennai. Because they haven't given the franchise. Bounce didn't give the franchise. That's why we brought like the Tony and Guy to Chennai. So first people you should get into franchising. Otherwise everyone will import other brands. Jokes apart, this is the truth. And like how you will have control, like one is you have a brand, and it is not a rocket science actually. What the franchise partner need? They need a recruitment support, training support, and they need some marketing strategies and collaterals, creatives. That's it. And after that, there is some operational issues within the staff, within the franchise partners, or within the product vendors, or we call it as a partners. So it's not a rocket science. Like people should not fear to get into franchising. At the same time, actually, it's not a rocket science. It can be mastered very well when people have the local expertise, local knowledge, and they have the like the cluster. Like when you take Enrich, is a very strong brand in Mumbai. So you already created a base. So why resist giving franchise?
I also would like to add to that, because there's some merit in what each of you is saying. It depends on what your brand stands for. So, for example, Blessing saying if it's a brand, the rest of it doesn't matter. We'll manage, and local expertise, local experience, whatever. While Vikram is saying, and that's the challenge we have, which is if you're an expertise, if the USP of your brand is expertise and a certain way of working, then replicating that in the franchise model is extremely difficult. So, Vikram, what is your experience really?
I would say if you want to pass on the business to the next generation, franchise is the best option, because you are continuing with the legacy, right? You want to see your next generation to continue after you. If you want to try fast, fail fast, you want to succeed, you want to fail, or you want to shut down, try your own.
One more thing, actually, like if you take our best stylists, those who make 3 lakhs, 4 lakhs only in hair, they have taken the franchise and they are making like 15 lakhs, 20 lakhs business per month. So how you will give growth to your like staff or team?
Blessing,
Only by
slightly different point of view. In that case, why in India none of the franchisee owners have got funding?
I think actually there is a fear factor actually, and one, but
And this is very,
and
contradictory to the developed markets,
yeah.
where you have great franchising model, you have everything working fine, but I think that legal frame is quite matured and robust. Here, like franchisee and franchisor, from day one, they're like, how can I eat him, or how can I kind of get him exit?
No,
So it doesn't start with the like positivity.
there
I
is
think
a
is what
basic
our experience is.
There is a basic problem. The books are not strong, so everyone is ready to fund, but when they come and look at your books are not strong.
Um,
We do only cocoa.
So all our experts have given us a lot of food for thought, and now I throw the floor open for questions. I request the members of the audience to ask specific questions about your business that can help you, because all the 4 experts are really experts in finance. So if you have questions related to how you want to scale up your salon, please fire away. Yes.
Good,
check. Good evening, everyone. My name is Amit. So, am I allowed to ask 3 questions? Quick questions, small questions?
No, sir. Please, can you limit yourself to only one? We are running out of time.
Okay. So, as
Can-
we all know, that
Louder.
you guys have multiple units of the salons, right? So, just wanted to understand how do you guys decide the time horizon of opening the new units? Is it based on the availability of the investors, or it is based on your financials, like on the decision how it is made? Yeah. Any one of you, any one of you, sir.
So if I talk about Enrich, for us, expansion comes, traditionally it was coming from services business. Now we are also doing bit of product, largely in home, at salon, home only by invitation, less than 1% of revenue. I think more important is that when you're putting any money, see to that the payback period for that amount is within 3 years. Because first we are in retail, second we are in services retail. So every 3 years there'll be some or the other thing which will disturb the market sentiment, and you will have 1 year which is going to be not profitable, or maybe you'll be into losses, and again you build up. At least in our experience in last 10-15 years, we have found that if your business is not going to give you your principal amount, what capex you're investing, which is a dead investment, and it is capital intensive, right? If you're not likely to recover in 3 years, then find a place which is better than that. As simple as that.
So I think your question, that's very interesting. I think your question is, when do you decide to open the next salon? So for example, Vikram said, I saw a place, loved it, I decided I'm going to open my next salon. That's how you started off, right? For us, it's about stabilizing what you currently have. If you're not in control of what you currently have, then it's a bad idea to open your next outlet. Like Vikram said, after a point, you get to the stage where it goes on autopilot, and if the problem in each salon is the same, so you have more control. But we have just about got to the stage where we have control over our 4 salons. We've set up systems finally where we know and we can manage things well. This is when we are, for example, looking to step out. Stepping out of North Goa was such a challenge for us. Now we're looking to step out of Goa. So it depends, unless you have control. And the second is, whose money are you using? If it's an investor, he will have timelines and targets. You can't take the money and sit on it. Like you said, your first year, you just took the money and they were sitting on it. Your investor is going to pressure you. So if you're going to take money from somebody else, then you better deliver, or at least promise them that I'm going to open 3 salons this year, 5 salons the next year, so on and so forth. So that will automatically set your timeline. But if you're doing it on your own money, then do it when you have control over your existing business.
So do you mean it goes with a stepwise? First you need to check your financials, and then you need to go for the investor. Is it like that? Yeah, that's the only way, right? Okay.
Any other question? All right, then. Thank you so much, panelists, for this very interesting conversation. And thank you, members of the audience. You've been a great audience. I'd like to present a token of appreciation.
Thank you for having us.
Thank you, everyone. Thank you for being such a good audience. And I'll see you tomorrow at 10:30. Stay safe, stay happy. Bye-bye.